Good to see you. Good to see you. And since this is a request show, analyze your trade, I will do my best to hit all those, but I have some high probability setups that are actionable today, just in case we run a little light. So, if anybody wants to make a request, otherwise we can start with some high probability trades, and I'll jump in the chat here as I see them. All right. So this pattern right here. This is my market roadmap line. I give it away for free on YouTube, JeffryTrader.com/YouTube. You can go get it. It's the video that's pinned to the channel, and I give you this line. It's just based on some EMAs, like the 144 EMA. I like to look for a pattern that bounces off of that, and we have that right here. When you get the close above the 618 level, this sets up a high probability trade. How high probability? 75% likely to hit that 1.1448, which is 90% of the way to the 1272. It's 70% likely to hit that one. So I like to edge it up just a little bit. 75% likely to hit that level right there. So beautiful potential trade right there. And the two of the trades I just took personally in my own account would be PGR right here. Same exact setup right here. This is one of the two patterns I look for in the market all day, every day to take actionable trades. And right there was the entry, looking for that move up into around 300 for the target right there. Stop is below this low right there. Simple as that. And then, so I took this one with some shares, and MCD is another one I took right there. You can see the entry right there. The target is right up there, also at that 330 area, 300. So happens to be kind of the same price. Stop is below this low right there, right like that. All right. All righty. Any requests, throw them in the chat. Otherwise, I'll keep hitting some of these charts here. So these are both high probability setups set up today, and I took them with my own money on the line. A lot of people don't do that. So UMA, OOMA, I see that one right there. I actually use UMA service for my business phone. This one right here, high up here, low down here. We don't have, I mean, right now you'd just be buying on hopes and fear, hope and pray till we start getting above the roadmap line here, and then confirm with a move up through this consolidation right here. So if we're going to see a move up, that move up could take us into the, almost $18 area right here, 1782. And let's check out, it does have a very nice three-wave structure on the retrace that did very proportionally match the retrace here. That first move down and that move down, very close to being exactly the same, which is classic in a retrace in the market when we see a three-wave type retrace. Three, and that first move, wave one, the retrace, wave two, and then this move, wave three. When they're very balanced, I call it an echo in the market. We echoed that move, and we tend to get the same kind of result that came into this kind of correction as the result coming out. So we could see a bigger move out of this right there for UMA. Walmart, please. About to kick off that high probability entry that I look for right there. I've already been watching this one. I want to see a daily close right above that 618 level at 95.58. That kicks off the potential for these targets right up here. 109, 75% likely, and 112, 24% likely right there. I like it. The risk is, of course, dropping back below the low down here. And, you could, since this was one big drop, didn't really have that three-wave structure like I was talking about on UMA, we could find resistance in this area where we consolidated right here on the way down, right there. So be careful that this, I do like where the 618 is sitting because it lines up right with that consolidation we did on the way up before we made this high. And that would be a trade I would actually consider getting into once we close above that level right there. Let's see, pop up my statistics. Yeah, that one's got a 67% historical win rate on this pattern, 67 past trades, and a 4.2 profit factor. So when it wins, it really wins. And when it loses, it does lose a few, but it doesn't lose big money. That profit factor profit vector of 1 is like the losses eat up all the wins. So anything well over 1, 4 is pretty strong. So I like to see numbers like that. All right, GLD. That one's kind of extended here. I'm not gonna lie. We haven't been back to visit the daily roadmap line since 2003. I was kind of talking about this earlier. It's been back here since we've interacted with it, and we've been on a big tear. It's been a lot of upside. If we zoom out and look at a weekly chart, it's going to be really extended up here. In the weekly chart, same pattern, just looking at a weekly pattern. We're up here at extension fibs that we don't typically see. I would be very careful expecting bigger upside, 320, the next fib up. And we haven't really revisited any lower fibs either as we blasted up through here. So this is looking a lot like what I call a bubble pattern, or look up market psychology on Google. You'll see a, a chart that looks like this. It kind of comes down, chops a little bit, and then comes back down. And this is when we see things get overexcited and do an exponential rise. Usually we'll see this chop in here and then break back down. That very well could be what we see in the coming days and months ahead in gold, but it doesn't look done yet, right? We could definitely see levels all the way up into 400 up here. The fib levels keep on climbing, of course, and we have 455 and even all the way up to 675. But I wouldn't expect, just based on my history of watching these, that's all less than 1% of moves will just go straight up there. But then it usually ends epically bad with a large retrace. So be very careful chasing this one much higher right now. Gold, not the biggest opportunity. Short-term opportunities, great. Long-term, big picture opportunities, I would be very cautious right now without waiting for a retrace and entering. Now, similar chart that is way behind, silver, we're not up here and extended at the moment. We're down here. So when you look at the same exact high that we made in gold, the same low we made in gold, but silver is lagging dearly here, and maybe a bigger opportunity to catch up in that area right there. So if you see gold slowing down, silver has the outsized potential to outperform. All right, PayPal. See that one in the chat. You can see there's that pattern right there I was just talking about, that big up and big down. Right there, you can see it. Prime example. So looking at the smaller picture, more local time frame on PayPal, I actually do have a target down at 42 that I've been watching for a number of years. This move up, the funny thing about the roadmap line, it works the same way upside down and right side up. So when we're looking at downside moves, this one hit the targets and then retraced and kind of stalled out, went a little deeper on the move up. So we're looking at a potential revisit of that low down around 50 and maybe an extension. Grab that low, grab that high. We stepped across the 618 level, and this would be more on a weekly chart here. You can see right there, we bounced off the weekly, coming back down. We set up the likelihood we may visit these levels right down here around 44, possibly down as low as 39 there on PayPal. That would be what I expect based on that chart right there. And I see ETHE, which kind of choppy. Not really the strongest, really just go to the Ethereum chart and take a look at what we got. So big picture, we hit this high right here. We retraced on Ethereum, made a low, came up and stopped in that 618 zone right there. Breaking down, we actually got below this low right here, which starts tipping the odds. We're going to see a lower low in that 3-wave echo type retrace that I was talking about, market echo. So we've got this move down in Ethereum. We've got this high we made right here. That next move down could be pretty devastating for Ethereum. Could see a move down here. I know it's not what a lot of people want to see on Ethereum, but that's very real. This EHTE, it is going through like a conversion from being just a trust to trying to be a spot ETF, and so the price action not necessarily reflective. So I like to go to the Ethereum chart and make that decision. And then Mora is pretty much at a resistance level here. just under the daily roadmap line right here. I call it the roadmap line. It did that big bubble pattern thing and a retrace. And if we put it on log scale, it looks completely different. And we have a low down here, high right here, a 618 retrace, a low right here, a high right here, and a 50% retrace with a three wave-ish, you know, has a intermediate three wave. We have the move down, we have this intermediate wave, and then we have another move down. And if this plays out, this is a different pattern I follow called the measured bounce pattern. It has the potential to come up here in the triple digits. Now, it may not work out. It may not be representative. Like if you take it off the log mode, that doesn't look anything like that anymore. And we may only get up into the $40 area right there. We may find significant resistance right here where we kind of topped out back over here on the way up the first time 4 years ago. So there's a resistance zone here. And if we clear it, we may be set up to go up to that triple digit area on Mora. All right. Now we're getting some more tickers in the list. So we'll go a little faster here. All right. Microsoft hit my downside target finally. So where did that target come from? Came from this first move down, set up off of that second, off that lower high right there. Same pattern, same whole thing. Now, if that was the echo in the market, we could see a large upside coming out of this, potentially equal to this move over here. Last time we bounced off the roadmap line, it'd be a beautiful potential upside, and that puts it right at the 480 to 500 level, right up there. It's funny how this all works out right here. The way, if you use these fib lines and everything's properly, that's an echo in the market right up there to that target area right there. Just the same move. Kind of crazy to think about. All right, I'll be shocked, but I'll probably be a buyer of Microsoft above that 420 area once we get above the daily roadmap line and that 618 level. Looks pretty solid. All right, Docu. Next up. So we've got not a three-wave retrace. This looking a little bit more obscure, maybe just a first move down. So we're going to have significant resistance to get through right in this area. And if we turn down at that zone, it may be one of those opportunities for a short. And we may see this do that. This may be the first move down right here because the structure is not three in nature. And we may see this go one, this be the first move down, this be the retrace, and this be the echo of the first move down. So this could be on a path to see lower prices down here around 50 for Docu right here. Could see this rally up to that 92, 93, 94, maybe even 100 area right there. That's kind of the zone between the two blue lines. And then if we reject off of that, we could see prices down here. This won't be set in stone until we actually make this high, wherever we make it up here. Just spitballing at the moment. All right, AJG, Arthur Galler. That one did the bounce. Very classic right there. That's the high, that's the low. We kicked it off right there. Not today, but yesterday. The target, 357 right there. And looking at the statistics on this one, 34 trades in the history, 82% of the time it works out, and a profit factor 2.3. So this is a high probability to get at least to that 357 target right up there. I like it. All right. Ever, EVR, whoop, EVER. Keep hitting extra keys. EV. Put my fingers on the right keys. So we did a retrace to the roadmap line the last time we did this. This move back here, we got up to that key level right there, the 1448, which is 90% of the way the 1272. And we have a potential bounce in place. Look at the fib line the other way. Went a little deep, but hanging out right at, this sets up a high probability pattern to potentially outperform that target on the upside there. We could potentially get on up into the 36 area if this will bounce. So we're looking for a bounce up through that 618 level. Those gap downs right there are resistance. I always like to think about gap downs like people were buying this stock, right? People are buying here, and then, oh dang, it gapped down overnight. And then maybe you bought more, and then it gapped down again. You're like, oh dang, I got to double down, I got to triple down, right? So those are going to be points if people doubled or tripled down as we got into the lows. They just want to get the fudge back out. Like I just want to close out my position. I don't want to sit through this anything anymore. So you see people sell, and we usually get a rejection off of these gap downs. Now, people are like, well, what about gap ups? Well, nobody was selling into this and then woke up the next day and it's up here and they're like, oh man, I just wanted to come back so I can buy it again. People, that's not the psychology, right? You get stuck in a trade and you just want to get out on a gap down, but you don't like, you may never even look at this chart again and look at the gap up, like if you sold out right here. So that's, you know, when people talk about gap ups being, we usually fill them. I'm not so sure, but we do usually fill gap downs and then we get a reaction because of that psychology of like, I just want to get my money back out and be back free. So we may see that before we pop on up into those areas up there. Whenever. All right. BAC. Whew. Big gap downs again. We've got a large resistance zone cooked up in here. We've got a large retrace cook, that we've done from these highs back here all the way down into this low. Not very, I mean, it does have a three wave-ish structure, but it's not very clean like some of the other charts. Kind of could be balanced if we look at that move down right there, compare it to that move down right there. Balanced-ish. So this could be a low. It's probably a low on a higher time frame. Maybe a weekly bounce right here. So we'll be looking for a return of price back up through that 618 of 42.40 to look for the continuation up here, possibly 50 right there. Right now, I wouldn't do much. I mean, if you're going to buy now, you would have to definitely watch your stop right here at these lows. If you're going to buy here, watch those lows because we can definitely extend it on down to 29 or something more sinister, more evil on the chart and return to the low back down here around 25. Right there. All right. Ding, 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 ding. I don't pull up ding as a chart. DKNG. And that is below the roadmap line. The roadmap line pretty flat. This is usually an indication of no trend when we see this coming across here. It did do a bounce and shot up to extension targets there and then promptly retraced. And now we are below the roadmap line, just hanging out. Not kind of at the bottom of the range we've been at for a couple of years. Not giving me warm, fuzzy feelings. We zoom out and look at the chart a little bit. We've got this low back here. We've got this high right here. That looked like pretty enthusiastic with a sort of exponential blow off at the top. We could see a retrace back down into the 618 zone right in here before we turn it back higher again. That would be consistent with retesting this consolidation we had right over here. And that'd be pretty solid, actually, if we bottom out right in here and set up a bullish move. Probably going to look at a bigger move up from here with that measured bounce type play. Let's just assume it's done now. We start moving up. We could actually see this outperform to the upside because this would be a bullish type move. You could see that move up to 100. Now, places you would want to watch for a resistance, 73 and 85 along the way. There's confirmation when we break through the 618. You run the fib from that high down to this low. We break through that 618. That's confirmation we're going to get the breakout higher than the high we had before. You could run it with a 2-point tool like this, that high, this low, right like that. So levels to watch, 44, 47. Get through that. That's confirming we're going on up to at least 56, 59. And then we get on up through there. I want to see it keep going to 100 if we're going to perform to the upside. That would be a new all-time high. So it actually compare that fib to this fib. Yeah, 83, 92, possibly 114. So we see that confluence of fibs right there. Highly likely to stop somewhere in this area right here on a breakout through all-time highs. If we can do it. I'm not saying that DKNG is going to do it. It's got a good case, but it also could come ripping back down to the $10 area if it's going to fail epically. get support sitting there at that 618.26, and then down here at 20. And if we get below 20, probably going lower low. Then back here, maybe down to 4. That'd be pretty rough right there. All right, Lily. Lily did a big three-wave retrace. This finally just kind of completed it. I was looking for a bounce, but it decided to do a higher time frame, bigger picture bounce right there. Down, echoing the first move with the second move right there, as you can see pretty clearly. So jumping up to the weekly time frame, we may have a little bit more downside to go. We haven't touched that weekly line right there. So this may indicate we need a little bit further down into the low 600 area before we can find that support and actually turn higher on Lily. So I would be very cautious getting long right now until we got down there and showed that we were going to hold this area right in this 600 area, possibly 640, right in there. Want to see that hold, then turn back higher, run the fib line between the current high right here from last summer and what might be the low down around 600. Then we'll have that 618 zone right around 840. If we could break up back up through that with the next move off of this support, break up through there, we confirm that we're going up higher, probably somewhere around 1,000, maybe even close to 1,100 on Lily. It's got some work to do to prove that we're going to do that, though. Could it be a bottom here? Could. Just doesn't look, doesn't meet all the criteria for me. Like this is just kind of in a no man's land. I would like to see it just stretch down a little bit further. We have a 1, 2, 3, potentially could come back up here 4, and then get one more move down in the coming months ahead for Lily. All right. You have GT calls on Goodyear tire. I'm not going to tell you what to do, but that looks like a bad chart. You're gonna have to evaluate for yourself why you got into this, and just looking at it, big picture, we came down into a dangerous zone here. Could we bounce from here? Yeah. Could we just sit here indefinitely? For sure. Right there, could just sit here and consolidate right on this level because it's been support before, consolidation for a while here. Now we're slightly lower than that previous one right there after we attempted to go higher, failed, came lower, lower highs. That's a downtrend right there. And it may very well make a low lower than we did back in COVID before this can turn it around here. If you played this on tariffs, I'm a very technical analysis person. I don't believe news drives the market. I believe news is the reason we put to the markets. We as humans love stories, but in general, the stories are afterthoughts. The real power is in the charts. And I kind of predicted that we were doing this retrace we did all the way last summer, and I said it didn't matter who becomes president. We're probably going to make a new high after the inauguration. Then we're going to go into correction, and it's going to be pretty deep and nasty. And that's what we've done. After we get through with this one, which could be any day now, we're probably going to go on to make new highs again somewhere in the late summer, early fall, and then go into a bigger correction than we just went through. So that's kind of what we're looking for. As far as my traders. Now, SPY right here, we did that big picture weekly bounce right here. Check it out. Beautiful, right into the line. So here's what I'm watching for. I'm watching for a resistance zone right here where we consolidated on the way down. If we reject off of that, this looks like one big fast move down. That's what's got me really nervous about the current situation. I have belief that we'll break through here and go back higher right up here before we do this bigger down. But I've got to be very careful when we get up in here between this 50, 540 and 580 area right in here. I guess 560 and 580. If we reject off of that, we're probably coming down here to these levels around 400, 430 on SPY. It's a very precarious position the market has put itself in right here. This is very reminiscent of, for me, very, very reminiscent of a time back here in 2007. Actually need to go to the 3-day chart. It was a little bit lower time frame on a 3-day bounce back here. Pull that back again. Rewind right here. See how we did the same bounce right here? Looks like candle-wise, duration-wise, looks very similar on this drop. Right here. Hit into the line on the 3-day. This was a lower time frame, only a 3-day instead of a weekly. Then we came ripping back out of it. Went up, made a higher high. And then we rolled over and went way lower. All the way down in here. That was pretty rough. And then we did that. After we bounced up, hit the bottom of the roadmap line, and then got continuation lower. And that was really rough for a lot of people. Me too. I was trading that. So this has got me spooked right now that the current pullback in SPY looks very much like this right here. Just on a weekly chart instead of a 3-day chart. That's my working theory, is that we're repeating that pattern just on a bigger time frame. You can see this launch on off, come back up here, maybe hit that level, maybe just make a higher high than we had right back here at the beginning of the year after inauguration, and then we could go on a big down. Big down could take us all the way back down to those levels we had back here in 2007, 8. That'd be pretty rough for a lot of people. I've had a lot of people tell me I'm full of malarkey on that, but it's in the charts. Makes me nervous. So this is kind of set up a somewhat of a corrective type pattern. I'm very cautious. I was very bullish on this until we did this last retrace. And then I got out. I was in it from down here. I rode through that pullback, and then I bailed before this recent pop because I just wasn't feeling it anymore. When we look at, let's jump down to the daily chart. Look at this pullback right here. We came up and stopped right in here. And I was very nervous about that. When we look at the bigger high to low right here, this one to this one, it's back on the log mode. That's where it looks the best. We rejected pretty hard off of this 618 level. So this first move being down, this retrace up into that 618 zone. We rejected very hard off of that right there. Came back up again. If we stay below this and start back down again, watch out. We're coming back down lower than that low, at least. May revisit this low back here. That's what I'm very cautious on for NEM. Now, if we could beat this high from back here just a few short months ago, if we can beat it, get on up in here, maybe do a retrace and hold it, we have the potential to push on up, but I'm not convinced that this is happening due to the rejection over here. I don't like it. That was we barely got higher over here and we rejected very severely. If we barely get higher again and reject very severely, this could be indicative that we're going all the way back down in the 30s on NEM right there. Alrighty. BitX, BITX. Now this is leveraged Bitcoin, so you got to be careful. None of the patterns I really use work on leverage charts reliably. So I have this thing I put up when I do my YouTube show. It says leverage, a 2x and 3x leverage chart does not follow patterns necessarily. Now, that all said, this thing has done pretty good doing the pattern. So this big retrace we had last year, we got up, closed above that 618, and got that 1448 level, 1.1448 right there. And then we promptly rejected again. We're holding a much higher low at this point. If you run the fib line from the low right down here in August to the high right up here we had in December, we basically did a 618 retrace. And if this is indicative of what's about to come on Bitcoin, which this chart's not moving without Bitcoin, it's 2x leveraged Bitcoin, we could potentially see a move right up here. I'm not going to go for higher fibs. 116 would be absolute crazy from 36 on this chart. If you go look at the Bitcoin actual spot market chart, we're stuck in this downtrend of highs right here. We're trying to push up through. We've got that roadmap line. We're below. There's a lot of stuff this has got to work through. Now we need to stay above that March high from last year. If we get below that, game over. Probably coming down to the 50,000 area on Bitcoin. Right now, I want to see this breakout. I have an upside potential just based on prior patterns for Bitcoin. Jump out to the weekly chart. Every time in the past, we've hit at least the 1618. After we do a big pullback on the 4-year cycle, we've hit at least the 1448. So this one that we did right here in 21 high, 22 low, we've only come up to the 1272 and we stopped dead right there, retesting the breakout. I want to see this get that last little bit, that last little extension to that 1618. Somewhere around the 150, 160, 170,000 area right there. That's what I really want to see. I'm hopeful we see it, but if, like I said, if we break down below that March high, it really starts tipping the odds that we're going into crypto winter early, and we're going to see that 60, 70% retrace, possibly down in the 50s, if not all the way down in the low 20, 30 area on Bitcoin. All righty. MP. I did ever already. Oh, yeah, Raju. And let's see, I got just time for a few more minutes, looks like. So MP, looks like that one's slightly played out here. We did the retrace. There was the high, here's the low. We're at targets and doing a retrace. I would expect this one to retrace all the way back down to this area right here. Already played out, hit the target. Wouldn't expect much more right now before we do another retrace. All right. David, got the next person maybe? I'm good, Dan.